Wynn Resorts has been one of the hotter, more speculative recovery stocks recently, with a high stock price of $195 back in 2018 and a low as 42 bucks earlier this year. Right now we're sitting at about 71, 72 bucks. What kind of value does Wynn offer for people looking to take a gamble on this stock? Today we're going to look at Wynn. Before we take a look at some of the numbers and the more nitty-gritty analysis, I wanted to take a step back and look at what Wynn is, what they do, what's really good about them, what kind of moat they have, and things like that. I actually learned a lot looking at this. I've been to Vegas like many times, and I've always seen the Wynn and the Encore and stuff like that, but haven't really learned about what they're doing around the world. But I mentioned earlier that their stock price was as high as 195 bucks a couple of years ago, and they did also offer a fat dividend. So right now, obviously, they're not offering a dividend, but this stock was kind of like one of those big, really stable, kind of like VIP-centric stocks. But obviously, as expected in the pandemic, with a lot of the other travel stocks and more luxury-centric stocks, last week I took a look at Delta too, in a similar situation. We're seeing prices really kind of deflated. Wynn is the operator of a number of ultra-premium resorts around the world. It started out in Vegas and then expanded there, and in recent years has also started operations in Boston, Macau, and neighboring Cotai as well. Surprisingly, the Asian portfolio of the business makes up the majority of the earnings in the recent years, and we'll take a look at that in a moment. The creator of Wynn, Steve Wynn, has taken a crucial role in kind of the redevelopment and rebranding of Vegas, especially since the 80s, but even more so going into the 2000s. He's also been involved with numerous other projects around the country as well as around the world. He was one of the creators of the Bellagio Hotel, which is known for its huge fountain display kind of out on the strip there, and was also the CEO of Mirage Resorts previous to that. So he kind of like will build a brand and then sell it, and then build another brand and then sell it. And then in 2002, he IPO'd the Wynn Resorts brand. And with Steve Wynn's strong reputation, basically he's earned the right to build the Boston properties and both of the Macau properties in recent years. Basically, when cities have really limited space, they say, we can only build one luxury resort here, and we want somebody who has experience. And then they'll say, hey, everybody, bid. Or, hey, everybody, come fight for this land, basically. And Steve Wynn has a really big reputation for making really good hotels. And so he won the rights for Boston and Macau. We'll get into more of the details about why that's so important for the whole company, especially in Macau, in a moment here. And if you haven't heard of Macau, Macau is basically the Vegas of Asia, and it's becoming a way bigger version of Vegas, basically. In recent years, China and Macau have been figuring out how to clean it up, how to make it more premium, how to kind of switch things over from being very gambling-centric to being more like Vegas, where it's kind of like more family-friendly now, with like a lot more shows and various other types of entertainment. And we'll go into that in specific for the Wynn properties in Macau, but China has also mentioned that they're putting more effort into solving traffic issues and congestion issues by adding like light rail, which is like, subways and stuff like that, and also adding bridges, and they're also doing land expansion as well. And so the future of Macau actually is very bright as far as, a gaming town, an entertainment town goes, but it's also a huge part of Wynn, especially going into the future. For years, Wynn Resorts has primarily focused on VIP experiences with gaming or gambling, basically as a big part of a big ingredient of their business model. But in recent years, they've been kind of switching out to be less gaming centric, so offering more entertainment and more family-friendly type stuff. I don't know if this is all related to this, but the first time I ever went to Vegas was right after 9/11. Flying on a plane was really scary. My family lived out in Colorado at the time, but I was in Los Angeles. And so I needed to get from LA to go visit my family for Thanksgiving, so I took the Greyhound. And the Greyhound stop in Vegas was in like the old part of Vegas. Got out of the bus, and I was like a freshman in college or something like that, and it was just like really like, dude, I don't want to be here for like 3 hours while I wait for my next bus kind of thing. But in recent years, I've been back to that part of town, and it's like super comfortable. It feels quite safe. Lots of cool, entertaining stuff going on with like nice family experiences and cool restaurants. There's also a lot of like non-family stuff too, but it feels way safer and way more comfortable. And apparently Steve Wynn has been involved with that whole kind of rebranding of Vegas as far as I've heard. It sounds like Macau is trying to go through that same kind of evolution like right now. Currently, we're in between earnings reports for Wynn Resorts, and so the next earnings report will be coming up kind of like in 3-4 weeks in early November. So if you're interested in an update on this video at that point, let me know down in the comment section. And just so you know, we're also about to launch a new series talking more about small business and entrepreneurship and kind of the things we've done, why I'm in Japan, what I do here, and things like that. So hit the subscribe button, hit the bell icon if you want to see more of that coming up here too. So in the last earnings report, as expected, revenues plummeted massively. They had a decrease of 94.8% in their revenues. So second quarter of 2019, they pulled in 1.66 billion, but the second quarter of this year, they only pulled in 85.7 million. So it goes without saying that the stock has been getting super curb stomped. And this led to a net loss of $637 million for the quarter, or negative $5.97 per share. Last year for this quarter, they pulled in a net income of $94.6 million for a gain of 88 cents per share. And most of this loss obviously was due to massive closures. Since then, especially in recent months, they've been taking drastic measures on cutting staffing expenses and other kinds of expenses like that. But interestingly, in the last few weeks here, we've seen slot incomes start to go back up again. So it seems like even though the pandemic isn't like done, there's no solution, there isn't a vaccine yet, so to speak, but it seems like kind of the pent-up demand from the recent months and also people being maybe a little bit more comfortable being outside in the public, it seems like things are starting to pick back up again in the casinos around the world, which is cool to see. So interestingly, I mentioned earlier that Asia makes up a bigger part of the business. I wanted to introduce the idea of EBITDAR, EBITDAR, earnings before interest, taxes, depreciation, amortization, and restructuring or rent costs. And when you break it down, it looks like the Macau properties make up 76% of these earnings versus the US portion of only 24%. And that was in 2019. So it goes to show you that Macau is, even though you might think of it as like a more minor thing, it like dwarfs all three of the properties and all the other stuff that they're doing in the US. And I mentioned earlier that Macau is going to be putting a lot more energy and effort into kind of like rebranding the area and making it much more nice. And I wanted to mention that earlier on, I mentioned that Wynn earned the rights to be building in Macau. And it's really interesting to note, and this is a big source of Wynn's moat in Macau, is that the Chinese government only allowed 6 licenses for gambling. They control gambling, but they also control development and a lot of other things really, really strictly. And they said 6 companies will get these licenses. Once that's filled, nobody else is allowed to get these licenses. That could change sometime in the future. We don't really know. But basically they said, hey, Wynn, you're our man. Come and build here. And they built the first one, and then they built the second one, and now they're building expansions on the second one. And the area where the second one is, called Cotai, is going under a lot more kind of reconstruction and optimization of the area. So it's going to be much more premium, much more resort kind of feeling area. And that could lead to drawing in even more kind of like VIP type people into the area. I mentioned earlier that they're trying to make a shift towards more non-gambling entertainment. In Vegas, part of this shift has focused on involving adding a convention center and renovating the golfing portion of the resort. While in Macau, they're adding the Crystal Pavilion, which is set to open in 2024 as an expansion of the Wynn Palace, the Cotai property. It'll have a high-tech theater, food halls, art museums, and other interactive experiences. I should also note that in 2006, they opened Wynn Macau, the first one. And then about 10 years later, they opened up the Wynn Palace, which is the Cotai property. And in doing that, they basically raised the overall room share that they hold in that area from 6% of all the rooms up to 9% of all the rooms. And then adding in all these non-gaming kind of entertainment things in the Crystal Pavilion, that will boost kind of the brand and the notoriety and the premium VIP-ness, I think, associated with the company. Management has stated that for the entire company, kind of operating margins in 2019 were 13-ish%. They're expecting that to go up to about 23% by 2029. So that's like not anytime soon. And that's not like, wow, take all my money kind of thing. But when you know a company has those kinds of projections in your mind, that shows you kind of the mindset that they're in, that they're thinking long-term, that they're thinking about paying down debt, they'll be paying off their properties in these coming years, and with a greater kind of focus on profitability coming up here, that's an exciting prospect, especially while they're beaten down so heavily right now. So going back into some of the numbers for the company, I wanted to take a look at the balance sheet that they provided at the end of the last quarter. And the main points I wanted to highlight are, number one, that the current assets have jumped up nicely since 2019 from 13.8 billion to 14.8 billion. Number two, of particular importance is the property and equipment net field, which shows a slight decrease, but it's from 9.6 billion down to 9.4 billion. Strangely, the market cap of the company is 7.5 billion right now at this lowered stock price. And so what that means basically is that you're getting this much property for only this much price. You're getting things on a discount because the stock's so beaten down and people don't really know when things are going to start picking up again. You know, assuming the values of these properties don't get like hammered in half or something like that, it makes the value proposition really, really interesting. Another notable point on the balance sheet is that long-term debt has jumped from about 10 billion to about 12.5 billion, which could be made up of taking debt to have a stronger cash position. It mentions here at the top, cash and cash equivalents have gone from 2.3 billion up to about 3.8 billion. And so some of that could be them saying, hey, we need to get some cash in our hands because things look so uncertain for the coming period. And that's not a dumb move to do in this situation, especially when they do have a lot of kind of expenses and liabilities on the books as well. And so that brings us into kind of like what's on the horizon for the company. And I think with the whole travel sector, we need to be thinking about like, when can we expect things to be back to normal, and when will things what even is normal now going forward? You know, we're talking about Delta Airlines and airlines in general. It's kind of like, is business travel ever going to be normal again? Or has business travel been largely replaced by things like Slack and Dropbox and Zoom, which I happen to have made videos on all three of those if you want to go look at those. But Wynn Resorts isn't necessarily business centric. And that's, I think, one of the exciting things about it. Regardless of whether it's business or not, we don't really know when people are going to be wanting to go having long-term stays at big hotels like this, how much gambling or gaming or being in places where you're sharing cards and dice with other people and drinking, if that's ever going to be like normal again, you know, and that's one of the risks you're taking when you're getting this kind of stock. One of the really tricky things about looking at the hotel business model versus like, let's say I'm selling t-shirts. Like if I don't sell my t-shirt today, I still have the shirt tomorrow and I can sell it. You know, I can change my marketing strategy, or I can, you know, make a fancier box or something like that. Like there are different things you can do to sell it. But with hotels, it's a little bit different because every night that passes with a room being empty is gone forever. It's kind of like if you're thinking about selling shirts, like the shirt disappears at the end of the day. If you didn't sell it, you lose everything. And so when considering that with hotels, what hotels often have to do is just heavily discount things. They're like, nobody's coming for $200, we got to lower it to 180. Nobody's coming at 180, let's lower it to 160. And if the price goes too low, a premium kind of super posh hotel might lose its image. And so for us as potential owners of the Wynn Resorts company, how far are we okay with them discounting rooms? You know, and if it is discounted too much, it's going to lose its VIP kind of status for people who are used to paying $300, $400, $500, $2,000 a night in the rooms, you know? And so that's going to be one of the challenges going forward here. And I think one of the other challenges to consider is right now, Macau makes up a huge portion of the earnings for the company. And yeah, the government has kind of given them preferential treatment, giving them a bit of a moat in Macau. We don't really know exactly how long that can continue. They could make more land, which they're doing, and they're in the habit of doing, and say, okay, now we have space for 6 more gambling hotels. That basically lowers their moat. And who knows how that could affect competition going forward, you know? So right now, the Macau properties make up a really big portion of the earnings, and they do have a nice moat, which is good, you know, and management has built that kind of moat into their earnings expectations over the kind of 10 or 20 years. But is that going to be here forever? We don't really know. You know, and the whole pandemic thing, when is a vaccine coming? When are people going to be okay going back to hotels and stuff like that? All of these are concerns that you need to be considering. That being said, in recent kind of weeks and months, we've seen an uptick in slot gambling as well. I'll be really interested to see how the next earnings report that comes out in a few weeks is going to reflect this uptick. Going into the winter here, I think we need to be a little bit cautious. You know, people are saying the pandemic might get worse again in the winter. Who knows if it actually will or not until we get there. But these are all risks that you should be considering looking at this stock. For me, for my own portfolio, I typically prefer to be more heavy in kind of like world-changing tech type stocks, but I'm not against adding something like this. You know, this kind of stock, it's a gamble and it could go down a little bit in the short term. I think eventually in the long term, we'll see it trend back up and it could even double or more than double from its current price. Again, like I mentioned earlier, things are kind of on sale because the entire assets of the company is worth way more than the market cap. I think we're pretty safe picking up some of these stocks, you know, and going forward, it's not really a matter of like, when will gaming pick back up again or when will luxury resorts pick back up again? It's more a matter of when, you know, and so it could be in the next couple of quarters, things start picking back up again, but it could be, you know, 2 or 3 years down the line. And so for you, if you're kind of one of these people that's like, I like to throw all my money at something, probably not the super best stock for you, but if you have a little bit of breathing room in your portfolio or a little bit of cash sitting around, you know, you could put some money into it. For me, I'm not going to be putting a huge chunk of my portfolio in Wynn. I might take a few percent and put it in there and see kind of what happens, but expecting nothing. But if things do go well, you know, I can reap some gains kind of thing. So it depends on your risk profile, kind of like how much breathing room do you have? What's your outlook? Are you thinking like you want to make gains in 2 years or you want to make gains over the next 50 years? What's your kind of strategy? So I think if you're kind of debating, should I get this stock right now? Like, let me know in the comments section and we can talk about your risk profile. We can talk about what are your goals, what are your expectations, you know? I've done videos on that in the past. I'll link those up here to help you figure out more about your own investing style. But for me, I think I might grab a small position just to kind of, you know, hold on to it and see what happens. I'm not going to be running at it with my, you know, whole portfolio or anything like that, because I feel like there are stocks that are a more sure shot, even like immediately in the very, very short term. So all that being said, I'd like to hear your comments down below. Thank you guys very much for watching all the way to the end. I know there are a lot of different YouTube channels out there for you to watch. If you haven't subscribed yet, please take a moment to subscribe. That would mean a lot to us. And that'll help us also to keep making these kinds of videos going forward here into the future. Thank you guys very much for your time. I love you guys and have a great week.